Glanbia's leadership under fire, shareholder discontent and calls for change. In a recent gathering that felt more like a wake than a celebration, Glanbia's top executives were met with a wave of discontent from shareholders. The mood was clear. Many investors are questioning the competence of the leadership, with sentiments ranging from disappointment to outright frustration. The numbers tell a stark story. Over the past 10 months, Glanbia's share price has plummeted by half, landing at €11, an alarming return to levels not seen in over a decade. Despite this troubling trend, management has continued to reward itself with hefty salaries and bonuses, leaving shareholders scratching their heads in disbelief. The annual general meeting, held at the Kielishy Hotel in Kildare, was overshadowed by a recent profit warning. This warning was attributed to external factors like Trump's tariffs and rising costs for whey protein, a key ingredient for Glanbia. However, as many shareholders pointed out, the issues plaguing the company's fluctuating share price have roots that dig much deeper than the last year. Roland French from Penman Securities highlighted a staggering decline in Glanbia's market valuation, which has dropped by over €2.5 billion since 2015. To add insult to injury, the total shareholder return, including dividends, has plummeted by an estimated 36%. Such figures are a glaring red flag for any executive team. Institutional investors voiced concerns about Glanbia's convoluted corporate structure, which attempts to juggle three distinct businesses: sports nutrition, ingredients, and dairy, while primarily operating from Ireland, even though most of its business is based in the US. Many are calling for a breakup of the company into its individual components to streamline operations and improve focus. Critics also pointed to Glanbia's lackluster track record in mergers and acquisitions, particularly the controversial purchase of SlimFast for $350 million in 2018. This once promising brand is now facing a fire sale, and Glanbia reported a staggering non-cash impairment charge of $91.4 million last year due to declining sales. The acquisition of SlimFast has raised serious questions about the company's ability to manage its brands effectively and to anticipate market trends. One investor lamented that Glanbia has failed to capitalize on its strong position in the protein powder market, missing out on the booming protein drinks and bars segment. This oversight could prove costly as competitors seize the opportunity. Amidst all this criticism, Tírlan, Glanbia's largest shareholder and the owner of the group's legacy dairy business, remains silent. With a 29% stake in Glanbia, this farmer-owned co-op holds significant influence, yet it has not publicly addressed the growing concerns from other investors. The question now is whether Tírlan will step in to advocate for change or continue to watch from the sidelines as the company navigates these turbulent waters.